Airbnb just reported 2.88 billion in revenue, beating expectations of 2.83, $1.79 per share in profit versus expectations of $1.53. It is down a lot after hours. Now, one thing that they did miss on was they missed on nights booked. They reported 99.7 million nights booked when the expectation was 99.9. That is 0.2%. Now, why are they down? Honestly, I don't know. Maybe it's because of overvaluation, because I know we've looked at the stock in the past. And if you look at the all-time high was February of 2021, which is a very common date for all-time highs for a lot of companies at $219, $220 a share. And it's currently at 101. PE currently is 55.76. There's a negative 5-year PE because they didn't have any profit. Let's see here. Not a lot of debt, which is good. $7.38 billion in revenue in the last 12 months. Obviously, this is pretty solid here in terms of what they just reported, because let's go to their quarterly profit income statement here. I mean, they've had some up and downs. So negative, slight positive, huge negative, slight negative. I mean, so they're starting to get the profitability. Now, guys, from a long-term perspective, long-term perspective, what do I get concerned about with Airbnb? Well, I recently tried to buy a home on Lake Lanier in Atlanta, the Atlanta area. And they made rules specifically for their neighborhood based on avoiding Airbnbs. Even though my rentals that I was going to rent were not going to be Airbnb rentals, they weren't going to be nightly rentals, they still had rules in place to block us from being able to rent anything. Communities are not liking Airbnb. It's just a matter of time. What the governments want to make sure is, are they getting their their tax revenue? Because on hotels, they can charge the taxes, et cetera. And Airbnb, I'm sure, is involved with that. I don't know the exact parameters of it, but I'm quite sure that some cities are going to start, and even individual apartment buildings, neighborhoods, et cetera, are going to start putting rules against the rentals on a day-to-day basis. So that's the biggest concern for Airbnb. Now, one thing I also want to look at, number of shares outstanding. That is going up. 531 million. It goes up every single quarter. We're at 638 now. I don't know what they just reported. Reported quarterly. We'll have to see what the numbers end up being for the quarter in terms of number of shares outstanding, but it's probably a lot. All right. Revenue is going up. Let's see here. Yeah, it's still going up. We don't have, okay, 8 pillars are right here, guys. 5-year price of free cash flow, 155. No 5-year PE because they haven't made money. Reasonably low debt. I mean, this is low debt for a company with such low cash flow. Good cash flow increase, revenue increase. All right. I mean, how do I feel about this? This is a long-term play. This is a really, really long-term play. So what are analyst estimates saying about earnings? All right. It's not as much as I thought. They're going to double, according to analysts, in the next 4 years, which is pretty good growth level, but I thought it would have been higher. Revenue, almost not even close, not doubling, but $8.5 billion to $15 billion on our analysts that we get as part of our data feed. So let's just go right to Stock Analyzer tool. Now, guys, I'm going to repeat over and over. You've got to make sure that you're comfortable with the risks on Airbnb. I don't know how it's going to play out, but I'm quite sure if you open their 10K, one of the big risk factors is going to be, what if a city or a neighborhood or something like that starts banning nightly or weekly rentals? That's a very important aspect to think about. All right. So revenue growth, we were looking at low to mid teens over a 5-year basis. So on a 10-year basis, let's go with 6, 10, and 14. Profit margin. All right. So 1 year they have 17% profit margin. What's their overall gross margin? 81%. Holy cow. Okay. So let's go with 15, 25, and 35%. That's a big profit margin at 35%. And remember, we have to put a big margin of safety in here because that 35%, this Stock Analyzer tool assumes these numbers day one. It's going to take some time for them to be more stable. I'm going to do the same thing for free cash flow. Now, PE. Guys, it's a growing company. I get that. But if you can't get a 55 PE or 44 PE, the growth level that's needed to justify that high PE is very, very, very difficult to achieve. Now, you might look at it and say, well, the X company is selling for 100 times. Okay, great. What matters is the growth rate of the earnings, which is growing fast, but is it growing enough to justify 55 times earnings? And the moat. And Airbnb is the nightly rental company. We get that, and it's great for people who own homes, but is it an easy one to overcome? I don't know. So I'm going to go with 14, 16, and 18 on the free cash flow, on the PE and the price of free cash flow. Now for desired return, this is still a company that's losing money. I usually go 12%, but I'm going to go higher here. I'm going to go 14, 17, and 20%. Guys, the higher I make my assumptions, the more return I need to get that margin of safety. These higher assumptions are harder to hit. That's a very, very hard number to hit. So the stock's currently at 105. I hit the analyze button. Yeah, it needs to drop quite a bit. Low price of 22, high price of 70, mid price of 43. And the key here, guys, is 14% revenue growth on $7.5 billion for 10 years takes us to $28 billion in revenue. Okay. So what is that? Assuming the current rates, it's basically 400 million nights every quarter. So see if that's really possible out there. It might be. So, if you believe in this, in all these numbers, if you believe this is going to happen, boy, you're going to make 20% return paying $70 for it, but it's still overpriced there. So I would just be cautious, because remember, every investment's the present value of all future cash flow. And also, the one thing I need you to do, subscribe to this channel. During earnings seasons, we do 3 or 4 videos a day. We report on these things. We report these videos within minutes of the announcements being made. We're about ready to do AMD. So subscribe. You will definitely not regret it. Thank you very much.